All right, today we're deconstructing something pretty wild. A trading performance that took a tiny $700 account and exploded it to almost $90,000 in just 3 weeks. So, we're going to unpack the exact system, the specific tactics, and yeah, the mindset that made it all possible. Okay, so let's just start with the number that got everyone's attention. $89,000. I mean, that's a staggering figure on its own, right? But what makes it truly incredible isn't just the final number, it's how we got there.
And get this wasn't some huge hedge fund or a trader with a massive account. No, this entire incredible run kicked off with just $700. That one detail, it just puts this whole thing in a completely different league. It makes it feel, I don't know, both relatable and, at the same time, almost impossible.
And you know, if that tiny starting account wasn't impressive enough for you, the timeline is just, well, it's staggering. This whole thing, from $700 all the way up to $89,000, it all went down in just 3 weeks. That kind of explosive growth just begs one very simple question.
So how is that even possible? That's the question, isn't it? And that's exactly what we're going to break down today, piece by piece. We're going to look past the insane numbers and get right into the engine room of this strategy to really understand the framework that made it all tick. And it all starts with a core belief, one that pretty much challenges how most of us are taught to look at the markets.
So the first big secret here, it's not some crazy complex algorithm or a secret indicator. Nope, it's a fundamental shift in perspective. For this trader, his name's Dave, by the way, the most important thing on the chart isn't time, it's price, period. He believes price is king. And for him, everything, and I really do mean everything, it starts and it ends with one thing: understanding market structure. He looks at it like the skeleton of the market, you know? It's what reveals the market's true intention. It's the language of price, and it is the only language he's really focused on listening to. He has this belief that the market is completely fractal. And what that means is the same patterns, the same structures you see on a weekly chart, they're happening right there on the 1-minute chart too. And this quote just nails it. Time doesn't actually change the structure, it just adds volatility, the speed. It's basically the gas pedal. It just determines how fast those patterns are going to play out.
So here's the crucial takeaway, the big distinction you have to make. Price tells you the destination, the where. It's what defines the actual structure. Time just dictates the speed, the volatility, the how fast you're going to get there. And really wrapping your head around this separation, that's step one.
Okay, so that's the core philosophy, but the big question is, how does he actually apply it? Well, let's dive into his practical day-to-day framework. He calls this his compass, and it's basically how he avoids getting totally lost in the noise and figures out a clear directional bias before he even thinks about placing a trade.
So this compass of his is a 4-step process. It's a top-down analysis that basically brings some order to all the chaos. He kicks things off on the daily chart to get the big picture. Then he drills down to the 4-hour, then the 15-minute, looking for more context and confirmation. And here's the key. Only when the direction is absolutely crystal clear from these higher time frames does he even think about dropping down to the 1-minute chart to hunt for an entry.
Okay, so he's got his core philosophy down, he's got his directional compass pointing the way, but what's the actual pattern he's looking for on that 1-minute chart? You know, what is an A-plus setup that's actually worth putting his capital on the line for? What does that look like?
Well, his entire entry system, it all revolves around identifying what he calls a high-quality point of interest, or a POI. Now, this isn't just some random line on the chart. It is very specific. It's the range created by the single move, the one candle or push that caused a break in market structure. That's the origin point. That's the source of all the new momentum.
Okay, and here's where his approach is totally different from what most traders do. See, most people get all excited and they chase the breakout, right? He does the complete opposite. His entire edge comes from just patiently waiting for the price to pull back into that origin point. And this simple act of patience, it lets him use a much tighter stop loss, and it gives him a way higher potential reward.
All right, now this next part, this is probably the most unique, most actionable piece of his entire system. It's a very specific, almost mechanical rule that he uses to time his entries with just incredible precision.
And what it does is it solves a classic problem for scalpers. You know the feeling, right? You found your perfect zone, you're waiting for the price to come back to it, but you get antsy, you jump the gun, and bam, you get stopped out just seconds before the real move happens. Well, he developed a very specific rule to stop that from happening.
The answer, it's a number.
It's not a gut feeling, it's not some complex indicator, it's just a simple count. He is literally looking for the market to make 4 to 6 distinct swings as it pulls back into his point of interest. And this isn't a rule he read in a book. This came from thousands and thousands of hours staring at the charts.
So what he's doing essentially is he's letting the move mature. As the quote says, he's waiting for at least 4 of these little higher highs and higher lows on the lower time frame. If the pullback only has, say, 1 or 2 swings, he just considers the whole setup immature and he won't touch it. It's such a simple but incredibly powerful filter that just keeps him from jumping in too early.
And finally, let's talk about the foundation for all of this, the mindset. Because look, you can have the best set of rules in the world, but they're pretty much useless if you don't have the discipline and the right mindset to actually execute them, especially when the pressure is on. He has this absolutely brilliant definition for a word that traders love to throw around: intuition. To him, it's not some magical gut feeling. It's simply compounded experience over time. That's it. It's the pattern recognition that gets literally burned into your brain, but only after you've taken thousands of trades, the good, the bad, and the ugly.
In this quote is just everything. It's his constant reminder that the market is always hunting for liquidity, those pools of stop losses and orders. His job isn't to guess, his job is to trade with the big move that sweeps that liquidity. And if he can't clearly see where the liquidity is, he knows he's probably about to become the liquidity.
Now, he has some pretty strong views on prop firms, and it all comes from his belief that you have to learn to manage real risk with real money from day one. He feels that trading his own live account, even when it was just a few $100, taught him a level of discipline that this sort of video game style of prop firm challenges, it just can't replicate. He actually calls their business model predatory and says if he had to start all over again, he would absolutely not go that route.
So, when you put all these pieces together, what you see is that this incredible run from $700 to $89,000, it wasn't a lottery ticket, it wasn't luck. It was the direct result of a complete, repeatable system. You had the framework built on price structure, you had the specific entry tactic, that 4-swing rule, and you had the disciplined mindset to execute it day in and day out. Ultimately, what this whole journey really shows us is the immense power of finding and then mastering a single, well-defined edge. His was counting swings. Simple but effective. And it really leaves us with a pretty critical question to think about for ourselves, right? What's our specific proven edge? And are we disciplined enough to actually stick to it?